Whew, that was a lot, right? So setup number one. All right. So we have it here. Now, of course, I have it with the candles, of course, just like we was going over before. Turnaround point, which is here, because this last selling candle point, let's change the color to, let's do a yellow. Okay. Here, right? It goes straight across. Boom. Right. But you notice that when it comes to this double bottom, when you use the line chart, it will be the second setup that we went over, where the second part is somewhat a bit higher than the previous one. And then, of course, the wick. So all of this is the zone, okay? All of this together is the zone. This is the zone. We don't care for the name. It's just the bottom zone. It's just a zone, all right? Now, what I'm going to do is now I am going to transition to the chart real quick. I want to show you, how it would look like in the market. Again, we are doing a top-down analysis, all right? All right. All right, so as you can see, we are on the daily time frame. Don't go away. Okay, cool. We are on a daily time frame. You can see it up here, daily time frame. All right. This is our first setup here. All right. You can see it. All right. Right here, we have a double bottom. You see, this is the last point. You could see inside of it. Hopefully you can see it. See the last bearish candle. This is the wick. And then the second one went a bit lower. So I identified the exact turnaround point in the wick itself, and I run it straight across. Now, notice that the second time the market come to the zone, how the wick hit it and it went back up. Now, what I'm going to show you is when I switch this from candles to the line chart, the wick is going to be gone. By the way, that's why they call it a stop hunt. It's as if it was never there, right? The stop hunt literally is designed to go and take your money. It's as if it never went to the zone. Okay, so let's transition to line chart. You see that? It looks like it never hit it. So that will be a variation number two when it comes to the double bottom. And then also you can see the next one is going to be exactly the same thing. So I just want to go over the first one first. So see how it looks? This is the zone, turnaround point. The second time it came towards it, you could see because where it closed, it looked as if it did not hit. But when you put the candles back on, you understand it did go into it. So here, okay, this area right here. So let's do a little bit of annotation real quick. That way you guys understand what I'm talking about, okay? So here is where we are looking for a buy in the 4-hour time frame, okay? H4, and the H4. So we are going to go down there, and then we're going to go to the 4-hour and see what price action the market give us before we bought up. All right, so let's run this real quick. Boom, collapse this. Where are you? I lost it. No, okay. There we go. All right, so we're going to go ahead and go to the H4. All right, so I have to, minimize and collapse. Okay, so we could find it. All right. It's not that far away. Just bring it more in. Okay, there we go. Here it is right here. Just bring it more in, collapse it more so we could get it right here. It's this one right here. So let's enlarge this real quick. Make it bigger. I want you guys to see the full candle, the full chart itself, okay? Gonna go wide with this. I really want you guys to see this. And then, boom, we're gonna make it the full canvas itself. I really want you guys to see both PA. So right here, let's look at the first one first. Okay. Bring it down here. Let's enlarge it, bring it up. All right, cool. So look, we're looking for the first bullish engulf in the market give us, right? So if we're looking at it, we understand that here, right, when you look at this, okay, it's about equal. All right. Now it did not close exactly above it the way we would like to. So here will be our entry point when it comes to the engulfing aspect. Now, please understand, it's just the rules, simply waiting for for buyers to take control, right? Now, don't think about the stop loss. Your goal as a trader is just to take the right trade, do the right thing, place the stop loss where it needs to be, and just keep it moving. Okay. So that's how it would be. Now, what I'm gonna do is I'm gonna go ahead and delete that. But we understand that not we're gonna delete it. We understand the market gave us 1, 2, 3, 4 candles before it engulfed the last bearish candle. One of the reasons why it gives us 4 candles is because the last selling candle itself was pretty big. Okay. Now we know it took 4 candles, so we're gonna collapse this real quick. All right, bring this down a bit more, and then we're gonna bring it back. Right. So see it right here. We have a double bottom. Okay. So remember, we always look to the left, which is right here, to see what the market did last time. That way we can understand exactly what to do. All right. So this is the market at the zone. I'm going to enlarge this. I don't know if you guys can see it right here. Market came to the zone itself. Boom. It tapped it with the wick. Now we're going to look for our first bullish candle. Okay. Now it sat within the zone area for a very, very long time. Just like before, it took about 4 candles to engulf the last bearish and then to start buying up. So it sat there. But in the case of this, we got, the second one of the second variation of a bullish engulfing when you get a bullish candle. Okay. So the gold color, okay, is a bullish candle. Okay. Just want to make that clear for some of us, some of the traders out there that's really, really new. All right. The gold one will be considered as a bullish candle because it's the one going up. Right. So here is your PA. All right. And of course, let me show you how it would look like when you take your buy. It would be up so, and then your stop loss will be at the end of this. Okay, we're gonna drag this down because that's the last low. All right, that's my entry point. And then please understand, this is a daily setup. Okay, it's a daily setup. So I could talk. There's nothing wrong with targeting, 4-hour structured TPs. But remember, we take the higher time frame setup because it gives us more gain, and we sat there and wait for it. So we're gonna have to let it play out for us. All right, we have to let it pay us. So I'm just gonna stretch this out. That way you understand where it's at. Now, once we execute, pull the trigger, put the stop loss there. Here's something I want you guys to see and understand. Okay, after the market give you that bullish engulfing, right? It sat there for 8 hours. Okay. It sat within the same level for 8 hours and then to start buying up. It's a daily setup. The market didn't get there in one day. It took multiple days, multiple weeks to get there. So don't just expect that you just buy up after you click in. Okay. Now, I'm going to collapse a little bit and then we're going to go back to the daily time frame. All right. I'm going to bring it down. All right. Stretch it. Now, you see that? Look at that. Now, just in case that way you can see it better, there goes the double bottom, and look at our entry point. Okay. So again, if we target in the next TP structure, there goes the first one right here. Right. Let me annotate that way you can see it. All right. First TP right here. And then the next structure point, which would be right there. So that would be considered that would be considered as a break and retest point because market did break structure. Right. It just did not retest it accordingly. At this point, it went to retest that same area, right? So I mean, your TP would have been right there. It would have been smashed. Okay. Of course, after this point, stop loss could go in profit. That's pretty much it, really. Okay. So when you have the book shows you the setup, right? It shows you the setup, and all you got to do is literally go to the chart itself, pick a time frame, daily, weekly, identify the same setup, and then drop down to your 4-hour and identify the setup as far as what price action they give you last time before it bought up and what price action did it give you for it about at the current time and what time. You know what I mean? Or what time. It's going to be very easy because you're taking the 4-hour time frame. Like I said, 1509. Okay. For me. All right. So that would be setup 1. Okay. There goes let's collapse this. There goes the second one, right? So the same concept, right? The same concept. So remember, the zone start at the turnaround point. So we're gonna use the line. You see that? Turnaround point. Once you identify the turnaround point, boom, you're good to go. Then you identify the wick low, the lowest it went, and that's it right there. See, I drag it across, boom, right? Now we have again a double bottom where this sun, right, the wick just a little bit went inside, but with the line chart, it didn't go all the way. And also, you could clearly see it clear as day that the market itself did not hit the zone. It'll close at the zone, so it looks like so, right? We have boom, it went up, and it stops like so, and then it went up. So okay, so color zone, boom, it will be something like this, right? That's the one we just went over. Okay. Now, just like I mentioned before, a lot of time the last selling candle will look like this. I didn't make this up. This is what the market gave us. I just put in the time and the effort to put it together, put it in a book, simplify it to make it as easy as I can make it for you. Just look at the picture, take it to the chart, and just simply read and react. Okay. So that's that. It's a lot of information because when it comes to back testing that I have to give you guys, but I have to make sure I keep the video within an hour, no more than that. Okay. Hey, please check me out on YouTube. Okay. You get the full extent of this. I know you might see this short on YouTube, Shorts or TikTok, Instagram. Check out my link. I really appreciate the follower, the subscribers, the comments. Feel free to ask any questions, anything that you want me to go over. I'll make sure I take some notes and throw that in there on the next video. Okay. So this is pretty much how you back test. Okay. This is pretty much back test 101. Identify the setup on the highest time frame first, drop down to the 4-hour time frame, see how that works, take the price action for what it is. That's how you would have done it, and identifying your entry. Okay. Now, again, this one. Now I have to collapse this so that when we do go back to the 4-hour, it will be a lot easier to find. Okay. I have to drag this down and then throw this way. Collapse. All right. It's right here. Here we go. All right. Easy. Easy. So again, like I mentioned before, we look to our left to understand, hey, yo, man, what was the last price action the market give us? That way we can, anticipate something like so. Now, please remember, the price action that the market will give you is one of 6 price actions. I cover that on the ultimate price action. All right, all of them are in here. All the selling price action. I'm sorry, and all the selling price action. Okay, so again, if you go on Amazon, just type in Royalty FX Academy. You'll be able to grab this. Appreciate the love and the support. And look, if you don't want to make the purchase, please remember you can read, or you should be able to read it online if you have Amazon Prime. Or check me out on YouTube. This full video is on YouTube, so you could watch this and get a much better understanding. All right, so I guess I could rephrase it for you. If you want to get a much better understanding of price action, zones, how to draw it, how to back test, I have the book available on Amazon, Royalty FX Academy. If you don't have the money right now, if you have Amazon Prime, they do allow you to read it for free, I think, right? And also, look, go on YouTube, Royalty FX Academy, and you could watch this whole video for free at your own time. All right. I do break it down to like 3 sections. So you just only there for like about 15 minutes, at most 18. So you got time to pause and continue, right? In sections. So, so setup number 2, okay, it falls in line. So that would be the second double bottom, where the second head is, the second hit itself is somewhat higher than the previous one. Look, double bottom. In the case of this one, we have a 2 bullish candle engulfing, right? So let me just stretch this out so you can see this clear as day, right? Let me just put this. All right. Gotta wrap this up a little bit. Boom. All right. So last low. We always use the last low when it comes to a stop loss, right? So if you think about it, right, we follow no rules. We make sure the setup is based off the higher time frame. That was the daily, right? What time frame are we using to enter the trade? The 4-hour time frame. We are in the 4-hour time frame. What price action are we using? The engulfing bar. Bullish engulfing. All right. This happened to be a 2 candle engulfing. So that means it took 2 bullish candles to engulf the last bearish candle. There goes your entry. there goes your stop loss. And if anything though, if you was targeting 4 hour TP, first one already got smashed. And then again, after you take the trade and place your stop loss, all you have to do is simply go back to the daily time frame and then just monetize it, right? Meaning monitor it. Yeah, monitor it. And you will see where your destination is, where your target levels are at. In the case of this one, we could just do this right here. So we have, see again, we got one here, like so. All right, boom, smash right there. So, by the way, I don't really care for pip counts, but ratio 251, right? So pretty good. That 1%, that 2% you're risking, you quadruple that. Okay, always stay true to the higher time frame. Make sure you take the 4 hour time frame as your entry. Put the stop loss where it needs to be, and then you could just target the next one. Now, due to the fact that we trade in the higher time frame, that means we are swing traders that are inspired to become position traders, meaning you hold the trade for months, weeks. Okay, so as you can see, the first day shot up, came back down, right? Still closed bullish. The second day went down, but it did not hit your stop loss. That means the second day you went negative and then it went up. And then first TP, I guess, based off daily structure. Let me also throw that in there. There's more than one zone. I just happened to target the one. I just happened to show you the one way it stopped at. So right here. Okay. So first TP smash, second TP smash. Again, it's how you choose to see it. And also within itself, you get break and retest. This hit came back down to continue up. Okay. So trading 101, how to backtest the Royalty FX Academy way, which is the right way, the best way to trade. Safe, plain, simple. Higher time frame, monthly, weekly, daily, technical analysis, double bottoms. That's your setups. Always on a higher time frame. Second thing we do, drop down to the 4 hour. That is the lowest time frame we're going to use for execution or how to enter the trade or where we're going to enter the trade. Next thing we do is wait for the 4 hour price action, the bullish engulfing price action to be specific. Okay. Once we get that, either again 1509, and then pull the trigger, place your stop loss at the last low. Okay. If you don't have a structural low like this right here, that's the last low. You will use the wick low off the price action or off the candle. Now, normally when I place a stop loss at the wick, I like to put it maybe 5 to 6 pips below, just in case if the market does give us a stop hunt, it does not wick me out. Okay. But that's pretty much it though. It's just a lot of information. Like the time goes by so fast, right? But that will be it though, okay? For the break and retest. Backtest 101. I am repeating the same thing over and over. Monthly time frame, weekly time frame, daily time frame for your technical analysis. 4 hour time frame is going to be your designated time frame for execution. And then price action, the reason why you're pulling the trigger, right? It will be the engulfing bar, okay? The engulfing bar. Since we were talking about double bottoms, it will be the bullish engulfing bar, all right? Please like, comment, and subscribe. I would really, really, really appreciate it. Still kind of new at this. I would really appreciate the support. So the more like and comments I get, it does encourage me to continue pushing this. All right. I do have a course, but I don't really promote it like that. But just watch the videos on YouTube and buy the book. All right. But again, if you type in royaltyfxacademy.com, that will be my course if you want to learn. It is very affordable. I make it as cheap as possible. I do teach Sundays, Tuesday, Wednesday, Thursdays, and also my one-on-ones are free. All right. At Royalty FX Academy, my one-on-ones are free. All right. The reason they are free is because I understand how much the one-on-one help. And when I was learning, $1,400 for a one-on-one. All right. Not all of us have that kind of money. Right. So it's free. All you got to do is just message me and I'll book you a 1 hour session. All right. And yes, you get homework. All right. We are not wasting my time. You get homework. You got to get homework. All right. We want to make sure you understand that. So Again, if you want to learn how to trade like so, all right, and not stress out and always understanding when your setup is going to be available, hit me up, royaltfxacademy.com. All right. And then go ahead and sign up and I'll be waiting for you guys. Okay. Oh, yeah. We trade together. We take the same trades anyway, regardless of the pair that you trade. All right. I got that in the hide. I don't need to charge you an extra arm and a leg just to trade with you. It doesn't make any sense if I'm making money trading to rob you. But I do appreciate the support. I do appreciate all my students that actually pays me to teach them. Right? It means a lot for you to come to me and ask me to teach you something that I know. So I truly appreciate that. So and I'll see you guys on the next video. All right. Oh yeah, you get one of these cool things right here, by the way. Maybe that might encourage you a little bit. When you do graduate from Royalty Fix Academy, you do get this is your cap and gown, okay? You get the crown, all right? You get the crown. All right. Again, appreciate the love and the support. I'll see you then. Thank you.